Welcome to today's What Moved the Market show. I'm your host Prem. It's Sunday, February 1st, 2026, and here is everything you need to know as the markets close for today. Markets witnessed the biggest budget day sell-off in 6 years as the Sensex plunged 1,546.84 points, or 1.88%, to close at 80,722.94. The Nifty 50 ended down 495.20 points, or 1.96%, settling at 24,825.45. The Nifty Bank shed 1.33%, closing at 58,816.45. The mood turned decidedly bearish as investors reacted sharply to the finance minister's announcement of a massive hike in Securities Transaction Tax on futures and options trading. The STT on futures jumped to 0.05% from 0.02%, while the STT on options premium was hiked to 0.15% from 0.1%. This represents a 150% increase on futures and 50% on options, immediately making derivative trading much more expensive. Broader market breadth deteriorated with 2,299 stocks declining against just 1,673 gainers. The rupee weakened to 91.92 against the dollar, approaching its all-time high levels seen in January, adding another layer of negativity to sentiment as currency weakness signaled capital outflows and investor caution. Let us now look at the stocks that moved today. Wipro was the strongest performer among the blue chips, surging 2.12% to close at 241.93 rupees, benefiting from its global dollar revenue streams and IT sector strength. Tata Consultancy Services gained 1.74%, closing at 3,178.20 rupees. Max Healthcare climbed 1.82%. These gains stood in contrast to the carnage elsewhere. The biggest losers were far more dramatic. Bharat Electronics Limited plummeted 6.02% despite the strong defense allocation as market participants rushed to take profits after a pre-budget rally. Hindalco Industries tumbled 5.78% to 907 rupees, hit by concerns over cyclical metal demand slowdown. State Bank of India fell 5.31% to 1,020 rupees. ONGC slipped 5.50% to 254.20 rupees. Adani Ports and Special Economic Zone dropped 5.06%. The selling was particularly vicious in brokerage and capital market stocks, which were crushed by the STT hike. BSE shares collapsed around 14%, Angel One tanked 10%, and Grow also sank roughly 10%, as these companies face a direct hit to their revenue models from lower derivative trading volumes. Electronics manufacturing, services, stocks delivered a bright spot in an otherwise dark day. Syrma SGS Technology soared 6.7% to 812 rupees after the government announced a mammoth 40,000 crore rupee outlay for electronics component manufacturing. Dixon Technologies climbed 5.4%, Keynes Technology rose 3.6%, and Amber Enterprises gained 4.55%. These gains reflected relief that the sector's investment appetite remained intact, despite earlier months of carnage, as the budget signal extended support for semiconductor and component localization. Support and resistance levels tell an important story today. Nifty 50 tested the critical 25,100 level and held support thereafter, plummeting as low as 24,800 during intraday panic selling. Resistance lies near 25,600. If selling continues tomorrow, a breakdown below 24,800 would signal further weakness toward 24,600. Bank Nifty saw even steeper intraday losses, hitting a low of 57,797 before recovering modestly. The index held support around 58,000 to 58,300 range, with key resistance overhead at 60,000. A sustained break below 58,000 would be deeply concerning. Sectoral performance varied wildly today. Information technology was virtually the only sector in positive territory, edging up slightly despite the broader market chaos. Capital market and brokerage stocks were massacred by the STT hike, marking clear losers. Defense and capital goods stocks saw profit-taking despite strong budget allocations, as the market digested gains from the pre-budget rally. Power utilities and renewable energy stocks traded mixed as investors assessed the 33 billion rupee increase in renewable energy allocation and the new carbon capture and utilization program with a 20,000 crore outlay. The standout winners were electronics and semiconductors, where the 40,000 crore rupee boost for component manufacturing drove passionate buying. From a regulatory standpoint, the morning's budget presented sweeping changes. Beyond the STT hike which shocked the F&O trading community, the government announced a 40,000 crore rupee outlay for electronics component manufacturing, a 20,000 crore rupee carbon capture and utilization scheme, a 200 billion rupee nuclear energy mission with focus on small modular reactors, and substantial support for rare earth corridors in mineral-rich states. The government also proposed restructuring of Power Finance Corporation and Rural Electrification Corporation to strengthen lending for renewable projects. Customs duty rationalization on solar modules, electric vehicle batteries, and critical minerals was announced to support clean energy manufacturing. These measures signal a strategic pivot toward manufacturing, energy security, and decarbonization rather than mass consumption stimulus. Commodity markets took a significant hit today. Gold on MCX crashed by around 6.5%, falling to 1,40,000 rupees per 10 grams, as markets sold off safe havens in anticipation of higher interest rates in a rising deficit environment. Silver was absolutely hammered, plunging 7% to 2,68,489 rupees per kilogram in a severe profit-booking session, following last week's record highs near 4,10,000 rupees. This was a catastrophic two-day correction as traders rushed to log gains after silver's spectacular 30.5% January rally. Crude oil remained relatively resilient around $69 per barrel as geopolitical tensions around Iran provided some price support, though global growth concerns limited upside. On the geopolitical front, tensions around Iran continue to color sentiment. Earlier in the week, US President Trump had threatened military action unless Iran agrees to nuclear negotiations, which had supported oil prices. However, signs of diplomatic engagement and a stronger US dollar offset some of those geopolitical risk premiums, weighing on crude prices today. Looking ahead to tomorrow's trading, expect a highly volatile session as markets digest the seismic shift represented by the STT hike and the broad-based capex-focused budget. Nifty 50 faces a critical technical test. If support at 25,100 holds, we could see a bounce toward 25,300 to 25,600. However, a breakdown below 24,808 would accelerate losses toward 24,600, the secondary support level. Bank Nifty similarly faces uncertainty. The index must hold 58,000 support, with resistance to tackle at 60,000. The STT hit will take time to digest, and traders should expect short covering rallies interspersed with fresh selling on strength, as market participants reassess positions in a high-cost environment. The winners from manufacturing, defense, and energy transition themes should see selective strength, while capital market stocks will remain under pressure until F&O volumes stabilize at new tax equilibrium. The bigger picture is positive for long-term structural themes like defense, semiconductors, renewables, and infrastructure, but near-term volatility around cost of capital and derivative participation will keep sentiment fragile. Here is your actionable takeaway. While the morning's STT shock sparked capitulation selling, the budget's underlying strategic narrative remains intact and potentially constructive for long-term growth. Infrastructure, defense, manufacturing, and energy transition are the clear beneficiaries. However, tomorrow's session will likely be decided by whether the STT hike triggers a permanent shift in derivative participation or a temporary repricing. Electronics and semiconductor stocks appear to offer the best risk-reward setup given the explicit 40,000 crore outlay and their battered valuations. For options traders, today's close is an inflection point. The economics of short-dated options have fundamentally changed, so overnight adjustments in your position sizing are prudent. Do send in your questions at our dedicated handle, and tune in tomorrow morning for another wrap-up of what happened in early trading. Markets open at 9:15 a.m. and we will cover the opening momentum, FII flows, and any overnight global developments. Stay tuned for tomorrow morning's wrap and send in your questions. This is Prem signing off. Good evening and happy investing.